We do want to turn to Amazon. It was a big beat on the top and the bottom line. The stock is up less than 1% right now as the conference call kicks off in the next 20 minutes. For more on the quarter, let's bring in Loup Ventures founder and Fast Money friend Gene Munster. Gene, are you convinced that spending is going to be in check, or do you think they're going to drop a bomb on this conference call?
Melissa, they're going to drop a bomb, and they said last quarter they'd enter an investment cycle, and it didn't play out in these March results. But it seems like they're going to probably guide some bigger numbers. I'm curious what you think or what the panel thinks about that set up last quarter. Very odd this quarter.
Well, I'll ask Gene. I mean, I think Jeff Bezos told you a couple weeks ago. I mean, he alluded to the fact that, spending is coming. And I think he was trying to temper some enthusiasm with the stock. Now, maybe I'm dead wrong, but I'm with you. I'm surprised the stock is behaving the way it is. Obviously, everything is in a conference call. I get it. But I do think he drops a bomb. And I think we're going to be talking about Amazon without a $1,900 handle in about a half an hour or so, whenever the conference call starts.
So, Melissa, what this means, I'm with you, guys. What this means for numbers is that the street's had a big, I think it's $47 for next year. That number is going to come down. That earnings number is going to come down. So ultimately what you're going to see is a revision down. To put it into perspective, the commentary about the June quarter is that the company expects that the operating income is going to be 25% below the midpoint or the street estimates for the June quarter. Now, compare that to last quarter, where they guided essentially in line. So this was a measurable tone that they're sending out. In other words, this big upside that we saw with the earnings, we really have to look past this, Melissa, and start to focus on the other pieces of the business. Some of those are doing exceptionally well, like retail, for example, growing twice as fast as the overall retail, but they're showing some signs of some fatigue around law of large numbers. And specifically is that if you look at the overall unit growth of retail, 10% versus 17% a year ago. When you put all of this together, this is a great company, but entering an investment cycle, which should impact how investors think about the Amazon story over the next year.
Gene, it's Karen. So then how do you think about the story specifically? How do you think about the stock here at 1,900, given what you think about not just in this quarter or next quarter, but more looking, for a year out, let's say?
I think the next year is going to be choppy for Amazon, and specifically some uncertainty around this investment cycle that we're talking about. And also with what's happening with the law of these large numbers, I think investors are going to become progressively more sensitive to the valuation. Now, you could argue that Amazon's always been an expensive story, but there's always been some upside potential in the near term around earnings. I don't think we're going to see that. And when you just step back and look at the valuation of Amazon relative to the other tech giants, it is orders of magnitude bigger. And so I think that if you, this is a great story to own if somebody wants to buy it and forget about it for the next 5 years. But I think investors wanting to really optimize their next year of returns, there's much better places to be than Amazon.
Hey, Gene, so that's the problem here, because it's a company that seems to be able to turn it on when they want, and people have rewarded that in the past. Where do you want to see operating margins? And again, I think you recognize, as you say, that they have to reinvest in the business. But at the end of the day, what is reasonable to expect, but should we expect anything more than we're going to get?
Keep in mind this business, yes, it's impacted our lives and we can't live without Amazon. But at the core of it, call it almost 90% of its revenue is really not a great business. Retail in general is not a great business. So when we think about, Tim, the opportunity around margin expansion, it is muted. And they've talked about this theoretical 10% operating margin target. And if you just look at this core retail type of a business model, it's difficult to get there. And so I want to be clear, Amazon is going to continue to dominate and change your license. I think it's a great story to own over the long haul. But I think for the near term, for this to work, valuation needs to be somewhat more reasonable. To get that, you need some more earnings upside, and the opposite is happening. We're entering this relatively large investment cycle. We'll see what happens on the call as they kind of step through that. I suspect that will be the first question on the call is, are we in fact entering this investment cycle?
Yep, Gene, a lot of questions there. Gene, we'll check in with you a little bit later on. We should note that Amazon right now is to the flat line, so it had been up by a little less than 1%. Where do we go here, Dan?
Well, listen, I think that, what he said, the law of large numbers are expected to do $275 billion in sales this year, growing at the slowest pace 18%, which is still astonishing,
Yeah.
okay, but the slowest pace in over a decade. So if you're telling me they're going to start spending and that's going to hurt operating margins, that's the problem with the stock at $1,900. I just make one other point. If you look at the tremendous symmetry that we have seen in the S&P 500 from the September highs, right, to the December lows and back now to those prior highs, that's a really nice place, I think, for a lot of investors to take profits. The fact that a stock like Amazon has not shown that same symmetry, has not gotten back to the highs, tells you that there's probably some more consolidation below those levels.
I just look at return on invested capital, and I look at, just by chance, Alphabet and Amazon have almost identical return on invested capital. However, the valuations are so wildly different. Can't get long Amazon, definitely long Alphabet.
To me, this is one of these cases where someone that really does care about valuation is able to say, hey, look, the quarter they just reported, they showed 360 basis points of margin expansion. I think these guys can do it when they want to do it. And I think you have much more meaningful and reasonable growth expectations. 18 is not what they used to do. AWS is in a competitive space, but I think they can turn it on and off. These numbers were very good. I'm not worried about the future spend.
I agree 100%. The numbers were very good, and they can turn it on and off, and margins have been improving. That, to me, has been the story. But it feels as though for at least a quarter or two, they want to maybe turn it off. And you have to wonder what that means for the stock price, bumping up against levels we saw in September 2018.
What happens with the NASDAQ, which hit a new high in today's session? We've got headwinds coming from semis, potential headwind here from Amazon, which looks a little weaker in the after-hours session. Intel specifically within the semis trading lower right now, Dan?
I would expect a quarter on Monday from Google or Alphabet that looks kind of like this. We're sitting there waiting for the guidance and saying, it's not going back to prior highs. These stocks are double the market cap that Facebook that we saw up 10% in the aftermarket last night. You're not going to get that from these sorts of names. You're not going to get that from Apple on Tuesday. I don't think so. To me, I think you've probably seen some highs for the time being, especially when you get the outlook, what Intel's CFO just said about China, that is going to reverberate across, I think, the tech investing world.